Impact Report, anticipated 50% growth in semiconductor, automotive and consumer electronics industries by Q1 2025. Date, February 14, 2025. Executive Summary. The semiconductor industry is undergoing a transformative phase projected to yield revenues of approximately $697 billion by Q1 2025, marking a 50% growth trajectory across key sectors including semiconductors, automotive and consumer electronics. This growth is fueled by rapid advancements in artificial intelligence (AI), the proliferation of electric vehicles (EVs), and the increasing demand for consumer electronics. However, this surge comes amid a shifting geopolitical landscape that complicates supply chain dynamics. 1. Key drivers of growth. 1.1 Surge in AI demand. The burgeoning demand for AI applications is a significant catalyst for growth in the semiconductor market. High-bandwidth memory (HBM) and specialized graphics processing units (GPUs) are leading the charge. Nvidia currently dominates this market, holding an impressive 80% share of AI chip sales. Analysts foresee the AI sector potentially reaching a value of $1.3 trillion by 2032. With HBM prices expected to escalate due to heightened demand. 1.2 Automotive sector transformation. The automotive semiconductor market is witnessing rapid growth driven primarily by the rise of electric vehicles and advanced driver assistance systems (ADAS). The shift towards greener transportation options is anticipated to make automotive-grade chips one of the fastest-growing segments in the semiconductor industry. 1.3 Geopolitical impacts. Ongoing geopolitical tensions, particularly between the US and China, are reshaping the semiconductor landscape. Export controls and tariffs are complicating supply chains, leading companies to stockpile components and adjust strategies to mitigate risks. For instance, the US has proposed increasing tariffs on Chinese semiconductors from 25% to 50%, potentially impacting prices and availability. 1.4 Talent shortages. A pressing challenge for the sector is the significant talent shortage. With estimates indicating the industry will need over 1 million additional workers by 2030. Both the US and China face a skills gap that could hinder growth if not addressed. Companies like Global Foundries are actively seeking alternative talent pools to mitigate this issue. 1.5 Investment initiatives. The U.S. CHIPS Act has catalyzed over $200 billion in investments aimed at bolstering domestic semiconductor manufacturing and R&D. Companies like Micron and TSMC are expanding their operations within the U.S., backed by substantial government support. However, delays in funding disbursement have raised concerns about the timing of new facility launches. 2. Market dynamics and expectations. 2.1 Revenue forecasts. 2023, the semiconductor market experienced downturns due to overproduction and geopolitical tensions, leading to an 8.2% decline in sales. Q4 2023, indications of recovery began to surface, propelled by AI demand and strategic production cuts. 2024, analysts projected a rebound for the semiconductor market, forecasting double-digit growth. Q1 2025, expectations are set for the semiconductor industry to reach $697 billion in revenues. 2.2 Key market segments. AI chips. The rapid adoption of AI technologies in various sectors is driving the demand for specialized AI chips. Automotive. The automotive semiconductor market is expanding rapidly due to the growth of EVs and ADAS. Consumer electronics. The rollout of 5G-enabled devices and smart technologies continues to drive semiconductor demand, though at a slower rate compared to AI and automotive segments. 3. Challenges and risks. 3.1 Supply chain disruptions. Geopolitical tensions and export controls pose significant risks to supply chains, particularly affecting the availability of critical components. Shipping delays and rising freight costs remain persistent issues for manufacturers. 3.2 Economic slowdowns. A potential global economic downturn could dampen demand for consumer electronics and other non-essential products. Excess inventory in some segments may also lead to price fluctuations and reduced profitability. 3.3 Technological challenges. The high costs associated with R&D for next-generation chips could strain smaller players, hindering innovation and growth. 4. Strategic recommendations. 4.1 Diversify supply chains. To mitigate risks, companies should diversify their supply chains and reduce reliance on single regions or suppliers. 4.2 Invest in R&D. Continuous investment in research and development is essential for maintaining a competitive edge and driving innovation in semiconductor technology. 4.3 Strengthen partnerships. Collaborating with industry peers and government agencies can help navigate challenges and foster a more resilient semiconductor ecosystem. 4.4 Embrace sustainability. Aligning with global sustainability goals can enhance brand reputation and ensure compliance with increasing regulatory pressures. 5. Conclusion. The semiconductor industry stands on the cusp of significant growth driven by advancements in AI and the automotive sector. However, challenges such as geopolitical tensions, talent shortages, and supply chain disruptions must be addressed to ensure sustainable progress. By implementing strategic investments and fostering collaboration, companies can position themselves to thrive in this evolving landscape. This report reflects the anticipated developments in the semiconductor, automotive, and consumer electronics industries, offering insights into market dynamics and strategic directions for stakeholders. The anticipated 50% growth in the semiconductor, automotive, and consumer electronics industries by Q1 2025, projected to reach approximately $697 billion, is driven by several counterintuitive dynamics that challenge traditional expectations in various sectors. Below are some of the key areas where counterintuitive insights can be drawn from the provided content. 1. Artificial intelligence AI demand versus broader market performance. While the growth in AI applications is a clear driver of semiconductor demand, the overall performance in traditional sectors like PCs and consumer electronics remains muted. For instance, PC sales are expected to grow by only 4% in 2025, while the demand for AI chips, particularly from Nvidia, is skyrocketing. This indicates that while AI is transforming certain segments of the market, it is not universally revitalizing all sectors within the semiconductor industry. Historically, one would expect a general uptick in all technology-related sales. But the actual scenario reveals a more fragmented picture where specific technologies are thriving while others stagnate. 2. Geopolitical factors and supply chain resilience. The geopolitical landscape, particularly the tensions between the US and China, is influencing semiconductor growth in unexpected ways. For example, while export restrictions and tariffs threaten to complicate supply chains, they also prompt companies to stockpile components and invest in domestic manufacturing capabilities. This paradox suggests that geopolitical strife, typically seen as a detrimental force, may inadvertently lead to stronger domestic industries and supply chains in the long run. Companies like GlobalFoundries are actively seeking alternative talent pools and investing heavily in domestic manufacturing as a direct response to these geopolitical pressures. 3. Talent shortages amidst rapid growth. The semiconductor industry is facing an acute talent shortage, with over 1 million workers needed by 2030 to keep pace with growth driven by AI and other technologies. This is counterintuitive because one would expect a growing industry to naturally attract talent. Instead, the aging workforce and a lack of skilled labor are creating a bottleneck that could dampen growth prospects. Despite significant investments in training and education, the industry is struggling to fill positions, suggesting that the anticipated growth could be stunted by the very forces that are driving it. For cyclical nature of the semiconductor industry, analysts have pointed out that the semiconductor market is notoriously cyclical, having shifted from growth to shrinkage multiple times in the past few decades. This cyclical behavior suggests that the current optimism surrounding AI and advanced technologies could lead to overcapacity and excess inventory in the future. While the focus is on growth, the industry must remain vigilant about potential corrections that could follow periods of rapid expansion, challenging the assumption that growth will be linear and continuous. 5. Investment in sustainability versus cost pressures. As the semiconductor industry grows, there is a simultaneous push for sustainability. However, this push may increase production costs, which could counteract the growth being driven by AI and other advancements. Companies are under pressure to adopt more sustainable practices, which may lead to higher prices for consumers and manufacturers alike. This relationship between sustainability initiatives and cost implications introduces a level of complexity that could affect market dynamics in unforeseen ways. 6. Demand for high-bandwidth memory (HBM). While the demand for HBM is expected to soar due to AI, the actual production and availability of these chips are limited by manufacturing complexities and lower yield rates compared to traditional memory types. This raises the question of whether the projected growth is feasible if the industry cannot ramp up production efficiently. The expectation of a 200% increase in HBM demand contrasts sharply with the challenges faced in meeting that demand, indicating a potential mismatch between ambition and capability. 7. Economic recovery versus consumer electronics demand. The semiconductor industry's recovery is expected to be robust, yet consumer electronics, a major segment of the market, are projected to experience only moderate growth. This divergence suggests that while technological advancements in AI are pushing the semiconductor market forward, traditional consumer markets may not be keeping pace, leading to a potential oversupply in certain areas. Historical trends would suggest a more uniform recovery, but the current situation indicates that growth may be concentrated in specific sectors, leaving others behind. 8. Increased tariffs and their economic impact. The plan to increase tariffs on Chinese semiconductors from 25% to 50% may seem like a protective measure for U.S. companies. However, it could backfire by raising prices for consumers and limiting the competitive landscape for American semiconductor firms. The expectation that tariffs will shield domestic industries might not hold true if they also result in higher costs and reduced access to essential components, thereby complicating the relationship between protectionism and market growth. These counterintuitive insights highlight the complexity and multifaceted nature of the semiconductor industry's growth trajectory, suggesting that while there is optimism surrounding advancements in AI and semiconductor technology, significant challenges and unexpected outcomes may also shape the future landscape. The report on the anticipated growth in the semiconductor, automotive, and consumer electronics industries through Q1 2025 reveals several critical insights and trends that many readers may overlook. Here are some of the significant content points that deserve special attention, along with explanations of their significance. 1. AI-driven growth dynamics. The report indicates that the semiconductor industry is set to reach approximately $697 billion by Q1 2025, driven significantly by artificial intelligence (AI) demand. The dominance of specialized AI chips, particularly high-bandwidth memory (HBM) and GPUs, is crucial. Nvidia's commanding share of the AI chip market at around 80% indicates not just a strong position but also the potential for challenges from rising competitors like AMD. Significance. The overwhelming focus on AI as a growth driver highlights a fundamental shift in technology, where AI is not just an application but a core component of future computing architectures. This shift could lead to increased investment in AI-related technologies, making companies that adapt to these changes key players in the market. Consequently, firms that fail to pivot or innovate in AI-related areas may struggle to remain competitive. 2. Geopolitical factors and supply chain resilience. The ongoing geopolitical tensions, especially between the US and China, have been identified as a significant influence on the semiconductor landscape. The proposed increase in tariffs on Chinese semiconductors from 25% to 50% could complicate supply chains and affect pricing. Significance: this geopolitical backdrop underscores the fragility of global supply chains and the potential for market volatility. Companies must navigate these complexities, which could involve diversifying supply chains or investing in domestic manufacturing capabilities to mitigate risks. The proactive steps taken by governments and companies in response to these geopolitical challenges can redefine competitive advantage in the semiconductor sector. 3. Talent shortages and skills gap. The projected need for over 1 million additional skilled workers in the semiconductor industry by 2030 presents a significant challenge. Both the US and China are facing talent gaps that could hinder growth. Significance: this labor shortage is often overlooked but is crucial for the industry's ability to scale and innovate. As semiconductor manufacturing becomes more advanced and automated, the need for skilled technicians and engineers will grow. Companies that invest in training and development or that create partnerships with educational institutions will likely gain a competitive edge. Conversely, those that do not address this talent gap may find themselves unable to meet production demands or innovate effectively. 4. Investment initiatives and policy frameworks. The U.S. CHIPS Act has mobilized over $200 billion in investments to bolster domestic semiconductor manufacturing and R&D. However, delays in funding disbursement have raised concerns about the timing of new facility launches. Significance: this emphasis on investment illustrates the strategic importance of semiconductor manufacturing for national security and economic resilience. The effectiveness of such policies will depend on timely implementation and the ability of companies to harness these funds for innovation and capacity expansion. Delays could lead to missed opportunities in rapidly evolving tech landscapes, particularly in AI and automotive sectors where demand is surging. 5. Cyclical nature of the semiconductor industry. The report highlights the cyclical nature of the semiconductor industry, where fluctuations between periods of growth and shrinkage are common. This cyclical behavior indicates the risk of overcapacity and excess inventory due to rapid expansions. Significance: understanding the cyclical trends is essential for stakeholders to make informed strategic decisions. Companies must balance investments and capacity expansions with market realities to avoid pitfalls associated with overproduction. An awareness of these cycles can lead to better risk management and strategic planning, enabling firms to navigate downturns more effectively. 6. Sustainability pressures. The report touches on the growing pressures for sustainability within semiconductor manufacturing, especially concerning the environmental impacts of production processes. Significance: as consumers and regulators increasingly demand sustainable practices, companies that prioritize environmental responsibility may not only comply with regulations but also gain consumer loyalty and enhance their brand reputation. Sustainable practices can also lead to cost savings in the long run, making this an important area for investment and focus. 7. Emerging market dynamics. The anticipated growth in automotive semiconductors due to the rise of electric vehicles (EVs) and advanced driver assistance systems (ADAS) is highlighted as a vital segment. Significance: the integration of semiconductor technology in the automotive sector signifies a transformative shift towards smart connected vehicles. Companies that can innovate in this space, such as developing specialized chips for EVs, will be well positioned to capitalize on the automotive industry's evolution. Ignoring this trend could result in lost opportunities in a market already moving toward electrification and automation. 8. Regional manufacturing shifts. The report mentions significant investments in semiconductor facilities across various regions, including the US and Japan, aimed at reducing dependence on single regions for chip production. Significance: the diversification of manufacturing locations can enhance global supply chain resilience by spreading semiconductor production across different geographies. Companies can mitigate risks associated with localized disruptions such as natural disasters or geopolitical tensions. This approach aligns with broader trends towards regional supply chains that enhance security and reliability. Conclusion. The report presents a comprehensive overview of the anticipated growth in the semiconductor industry driven by AI, automotive innovations, and geopolitical dynamics. However, the points mentioned highlight significant areas that warrant further exploration and consideration. Stakeholders in the semiconductor ecosystem, manufacturers, investors, and policymakers must pay careful attention to these trends to navigate the complexities of this rapidly evolving industry successfully. Understanding these nuances can provide a strategic advantage in a market poised for substantial growth while also addressing the inherent risks and challenges. 1. AI demand is the catalyst for growth. The most significant driver for the anticipated 50% growth in the semiconductor, automotive, and consumer electronics industries is the surging demand for artificial intelligence AI applications. AI chips, particularly high-bandwidth memory HBM and specialized GPUs, are expected to dominate the market. The dominance of Nvidia capturing around 80% of the AI chip share exemplifies the shifting dynamics within the semiconductor industry. This section of the market is projected to reach $1.3 trillion by 2032, highlighting the critical role of AI in shaping market demands and the future of semiconductor technology. 2. Geopolitical tensions and supply chain resilience. The evolving geopolitical landscape, particularly the tensions between the US and China, significantly influences the semiconductor industry. Export controls and tariffs are complicating supply chains, prompting companies to adapt their strategies and stockpile components. The US has proposed increasing tariffs on Chinese semiconductors to 50%, which could have profound implications for pricing availability and the overall competitive landscape. This aspect of the market dynamics emphasizes the need for resilience in supply chains to mitigate risks associated with geopolitical uncertainties. 3. Talent shortages in the semiconductor sector. A looming challenge for the semiconductor industry is the substantial shortage of skilled labor. Estimates suggest that the industry will need to add over 1 million workers by 2030 to meet growing demands. This talent gap poses a risk to the sector's growth trajectory, particularly in the US and China. Companies are exploring alternative talent pools and implementing workforce development programs to address this issue, underscoring the importance of human capital in sustaining technological advancements and production capabilities. 4. Investment initiatives and domestic manufacturing. The U.S. CHIPS Act, which has spurred over $200 billion in investments, is a strategic initiative aimed at enhancing domestic semiconductor manufacturing and research and development R&D. Companies like Micron and TSMC are expanding their operations in the U.S. to capitalize on government support. However, delays in funding disbursement have raised concerns about the timing of new facility launches. This section highlights the critical intersection of government policy, investment strategies, and the competitive landscape shaping the future of semiconductor manufacturing and technological innovation. Here are 3 famous historical cases that reflect significant growth and transformation in technology industries akin to the anticipated growth in the semiconductor, automotive, and consumer electronics sectors. 1. The rise of Silicon Valley, 1950s to 2000s. The development of Silicon Valley as a global technology hub is a prime example of how innovation in semiconductor technology can spur economic growth and industry transformation. In the 1950s and 1960s, the emergence of companies like Fairchild Semiconductor and later Intel laid the groundwork for the microelectronics revolution. The introduction of the integrated circuit and microprocessor led to rapid advancements in computing, telecommunications, and consumer electronics. By the 1980s and 1990s, Silicon Valley had become synonymous with the tech boom, spawning countless startups and innovations that reshaped the global economy. This period highlights the critical role of semiconductor technology in driving growth across various sectors, similar to the current anticipated surge in demand for AI and EV-related chips. 2. The automotive industry's transition to electronics, 1980s present. The automotive industry has undergone a significant transformation over the past few decades, particularly with the integration of electronic systems and components. Beginning in the 1980s, as vehicles became more reliant on electronic controls for engine management, safety features, and infotainment systems, the demand for semiconductors within the automotive sector surged. The introduction of advanced driver assistance systems (ADAS) and more recently electric vehicles (EVs) has further accelerated the need for automotive-grade chips. Companies like Tesla have revolutionized the automotive landscape by incorporating cutting-edge semiconductor technology, enabling features like autonomous driving and extensive connectivity. The ongoing shift towards electric and autonomous vehicles mirrors the current semiconductor industry's anticipated growth, driven by innovations in AI and smart technologies. 3. The consumer electronics boom 2000s present. The consumer electronics industry has seen explosive growth since the early 2000s, driven by advancements in semiconductor technology. The introduction of smartphones, tablets, and smart home devices has fundamentally changed how consumers interact with technology. Companies like Apple, Samsung, and Google have leveraged advancements in chip technology to create powerful, multifunctional devices that have become integral to everyday life. The transition from traditional computing to mobile and smart devices has not only transformed consumer behavior but also reshaped supply chains and manufacturing processes globally. The current trends in smart devices, wearables, and IoT reflect a similar trajectory, where semiconductor advancements are expected to drive significant growth in consumer electronics by 2025 and beyond. These historical cases illustrate how technological advancements, particularly in semiconductors, can catalyze substantial growth across various industries, which resonates with the current projections for growth in the semiconductor, automotive, and consumer electronics sectors. The semiconductor industry is on the cusp of a significant transformation, with projections indicating a robust growth trajectory driven by advancements in artificial intelligence, AI, electric vehicles (EVs), and consumer electronics. By Q1 2025, the semiconductor market is expected to reach approximately $697 billion, representing a 50% increase across key sectors, including automotive and consumer electronics. Key drivers of growth. 1. Artificial intelligence demand. The explosion of AI applications is a primary catalyst for the semiconductor market's growth. The demand for specialized AI chips, particularly high-bandwidth memory (HBM) and GPUs, is surging, with Nvidia leading the market. Analysts predict that the AI chip market could reach a staggering $1.3 trillion by 2032, highlighting the profound impact of AI on the semiconductor landscape. 2. Automotive sector. The automotive semiconductor market is set to expand rapidly, driven by the rise of EVs and advanced driver assistance systems (ADAS). As manufacturers transition to greener transportation solutions, automotive-grade chips are projected to become one of the fastest-growing segments, reflecting a global shift towards sustainable mobility. 3. Geopolitical factors. Tensions between the US and China are reshaping the semiconductor landscape. Export controls and tariffs are complicating supply chains, prompting companies to stockpile components. The proposed increase in tariffs on Chinese semiconductors from 25% to 50% could significantly impact prices and availability, leading to a reconfiguration of global supply networks. 4. Talent shortages. The semiconductor industry faces a significant challenge in the form of a skilled labor shortage, with estimates suggesting the sector will need to add over 1 million workers by 2030. This talent gap, particularly in the US and China, could hinder growth if not addressed. Companies are exploring alternative talent pools and investing in training programs to fill the gaps. 5. Investment initiatives. The U.S. CHIPS Act has catalyzed over $200 billion in investments aimed at bolstering domestic semiconductor manufacturing and research. Companies like Micron and TSMC are expanding their operations in the U.S. with substantial government funding. Although delays in funding disbursement raise concerns about the timing of new facility launches. Market dynamics and competitive landscape. The semiconductor market's cyclical nature is evident, with previous downturns now giving way to signs of recovery. While the latter half of 2023 showed promise, the industry must navigate challenges such as potential overcapacity and excess inventory. Key differences in outlook between sources highlight the varying perspectives on immediate revenue growth versus long-term sustainability. Timeline of events. 2023, the semiconductor market faced a downturn with an 8.2% decline in sales due to overproduction and geopolitical tensions. Q4 2023, signs of recovery emerged, propelled by AI demand and strategic production cuts. Early 2024, analysts projected double-digit growth for the semiconductor market driven by AI and automotive sectors. Q1 2025, the industry is expected to achieve $697 billion in revenues, with continued growth anticipated as geopolitical dynamics evolve. Future outlook. 1. Continued AI integration. As AI becomes more integrated across various sectors, demand for specialized chips will escalate. Companies must innovate rapidly to keep pace with this demand, potentially leading to a race for advanced chip designs and production capabilities. 2. Geopolitical resilience. Semiconductor companies will need to enhance the resilience of their supply chains in response to ongoing geopolitical tensions. Strategies such as reshoring, friendshoring, and diversification of supply sources will become critical to mitigate risks. 3. Talent development. Addressing the talent shortage will be essential for sustaining growth. Companies will need to invest in workforce development and education initiatives to build a skilled labor pool capable of meeting the industry's evolving needs. 4. Investment in R&D. As competition intensifies, investing in research and development will be crucial for semiconductor companies to innovate and maintain their competitive edge. Collaborative efforts among industry players will likely increase to foster innovation and address shared challenges. 5. Sustainability efforts. The semiconductor industry will face mounting pressure to enhance sustainability practices. Companies will need to balance performance with environmental responsibilities as they adapt to stricter regulations and consumer expectations regarding sustainability. Conclusion. In summary, the semiconductor industry is poised for substantial growth driven by AI advancements, automotive innovations, and strategic investments. However, challenges such as geopolitical tensions and talent shortages must be navigated carefully. By embracing innovation, enhancing supply chain resilience, and prioritizing workforce development, the semiconductor sector can position itself for a successful and sustainable future. The next 2 years will be pivotal in determining how well the industry adapts to these dynamics and capitalizes on emerging opportunities.